This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft. Thank you all so much for the continued support and for tuning in. If you like what you hear at Planet MicroCap, please take a moment to rate us 5 stars on Spotify or Apple. It really helps more folks discover the show and join the MicroCap investing community. Registration is now open for the Planet MicroCap Showcase Toronto in partnership with MicroCap Club, happening October 21 through 23, 2025 at the Arcadian Loft in downtown Toronto. Whether you're a seasoned investor or just getting started, you'll want to be there. If you go on the website right now, we already posted initial presenting companies as well as speakers and sponsors. So visit planetmicrocapshowcase.com to register and see all this information. And I look forward to seeing you in Toronto. My guest on the show today is Maj Soueidan, founder, editor, and chief portfolio officer at MSM Microcaps and GeoInvesting. In this episode, Maj shares a comprehensive update on his investing philosophy, including the performance and evolution of the MSM Quality Index, a passive, factor-driven approach to finding high-quality microcap stocks with multi-bagger potential. We discuss how the MSM Index blends qualitative and quantitative analysis, what separates it from traditional model portfolios, and the role of occasional rebalancing. Maj also walks us through how the index overachieved over 100% returns since inception and why it's built for long-term staying power. We also dive into the differences between MS Microcaps and GeoInvesting, one serving as a pipeline of ideas, the other as a deeper research platform, and how Maj thinks about conviction levels, diversification, and information edge. From spotting opportunities in quote-unquote old boring companies, benefiting from data center and AI trends, to reading between the lines and press releases and earning transcripts, Maj offers a masterclass in info arbitrage and microcap idea generation. And for full disclosure, we discuss a number of ideas and stocks in today's episode, and I am not a shareholder in any of them. So thank you again for tuning into the Planet MicroCap podcast, and please enjoy my conversation with Maj Soueidan. Maj, thank you for joining me today. How you doing, dude?
Thanks, Bobby. It's been a while.
I know, dude. We went from being weekly to quarterly to, I guess now are we semi-annual? I guess are we semi-annual?
We both got busy. You had a you had a big conference you had to prepare for. I was busy with the the Substack and changing things there, and so maybe we'll get more regular now.
See, I just assumed that it was Puerto Rico that was just keeping you at bay. They were just like, you already hit your number of days, like that's it. It's like, oh man, but Vegas,
Well, last year was this year was and last year was a little tight, so I'm just being careful on things. So
listen,
I threw my back out too. I didn't want to. It was ridiculous. I was like a invalid.
I know. I mean, little does everybody know, Maj is actually 35, and just really a poor back. How many days are we at right now? Should I help you with counting this so I don't miss hanging with you when we got Toronto coming up?
I think I'm good. Like I think come September 1st, I'm good.
Come September 1st, you're good. You can travel freely. You're not under lock and key.
Yeah, basically, yeah.
All right, good. All right, I'm going to hold you to it. In fact, we'll say publicly here that you're going to be pitching at the Toronto. No, we're still working out the details.
I'm actually going to Germany on Thursday.
Oh, sick!
For a wedding. So.
Oh, that'll be fun.
Ziggy was my analyst at Geo for a long time.
Oh, he's getting married?
Yeah.
Oh, sick! That's awesome, man. Hell yeah. Well, tell Ziggy we say congrats from all of us here at Planet MicroCap. That's really cool. What's he up to now? Is he still? Are you guys still working together, or is he doing something else?
He's doing Grizzly Research, a short selling, firm.
Oh, right.
Funny, both my my partner Dan David, he's doing a short selling firm with Wolfpack, and then you got Ziggy doing short selling at Grizzly. I produce short sellers.
Yeah. Look at you. Like you went from like the China hustle, and then long only, and now you're just your tree. Your coaching tree is now going back out to short selling.
I guess they came here, so there's a lot of frauds here.
This is I don't know if this is if this is indicative of something or signal or what, but My goodness. Oh, that's so funny. Well, good shit. Well, look, like you said, it's been a minute since we had you on here to do kind of an update based on some of your data that you're compiling over at MSM Quality Index. So, what's going on? Let's get the update. What's going on, and also give people a little reminder of the MSM Quality Index and whatnot.
Sure, yeah. So, let me get through the, disclaimers, here, just educational purposes, not advice, all that good stuff.
And for those who are listening in, Maj also put together a nice little slideshow for to see it. So if you're watching on YouTube, or if you're not watching on YouTube, go to YouTube and you see the slideshow. Okay, go.
Just, you agree to terms and conditions that we're not investment advisors. For if you consume this in any fashion, there. So, just a reminder again, this is an index for, we haven't talked in a long time, so I'll go really quick to this, Bobby. We launched this index in February 2022, and then we went active with it like in a Substack in February 24, I think it was. So it was like a private group first originally, of some members from Geo that we tested it with. And basically, it's just an index where we're just adding stocks that meet certain quality factors, but are hitting multi-bagger factors also. It's not just enough to find quality companies. We want to find them when they're hitting multi-bagger factors. We put them in the index, and we sprinkle it with like what we like to call high probability turnarounds. And there's a lot of those in our world too. So we do that, and we just use like a 10-point quality list that stocks are moving to that list. Maybe they won't meet it yet, and then go through some multi-bagger stuff. A lot of qualitative pieces to it, so it's very asset heavy. It's not, so we like to say, hey, we have a qualitative plus quantitative approach, blend them together with multi-bagger factors, and we like to get, see how that will do. And it's doing well. And I'll show you the chart in a second, but we think that it's really a lot of work, but it's paying off. We got 51 multi-baggers so far out of 120, meaning 100% or more, and I'll show you some of those stats in a second. 9 have been acquired already, and we think this sets us apart from a lot of the other major indexes out there, of course.
Well, and real quick, and I've asked you this before, but just for those that may not know, like what would you say separates the MSM index as you construct it? What makes it different than say just like a model portfolio? Because I mean, either way, the performance is stellar. But what's the big difference?
So the model portfolio at Geo, as you know, that you're talking about GeoInvesting in model portfolios.
No, just in general, just a model portfolio in general.
Yeah, the index here is the ones we do are, first of all, they're passive. So we're not actively rebalancing the index every second, every quarter. So basically, what I like about it is it tests really the stock picking skills without any basically eating what you're making here. And that was really the goal of it, to see, can we find these stocks that have good long-term traction without having to touch it? And model portfolio will be more active in general. You may be adding stocks when they hit certain valuation markers, whatever. A lot of short-term potentially kind of targets, but we want to see if this index is going to produce a massive amount of multi-baggers 10 years from now. But more importantly, we want to see, can they hold that? And that's what time will tell us, right? Because there's a lot of churn in some of these stocks. I mean, they can go up, then multi-bust, and which I expect will happen to a lot of companies. But we want to see, though, okay, well, can we get at least a 2 to 5 year good meat return? And I think if we do that, we're doing our job for our members. But what we did also, and I'll get to that too, is that because we understand that stories change over time, we're going to rebalance on occasion. So we launched a 2022 index, and then we went 3 years without any kind of rebalancing. And then in April of 2025, we launched it. We kind of rebalanced it and took away some stocks. So overall, so far we've added 120 total stocks to our index kind of platform. Like 110, I think, were on the 22 index, and then we rebalanced to 125. We kept we took away a bunch, and now we're back to maybe 80 something on the 225. But we're still tracking the legacy index because we want to see how that performs over time. One of the things I talked about was like when I gave a presentation on this to our members. If it ain't broke, don't fix it. So what's the fucking first thing that fucking happens? So I removed like 20 stocks from the index, and one of them was, I think, SVT. Gets acquired goes from $13 to $40 in one day. So and that wasn't on the 25 index. So there's like how an active fucking move, killed hurt the performance to some degree.
By the way, Maj is not salty about this at all, as you can everyone can tell. It went from PG to PG-13, I think, in a matter of 0.5 seconds.
Well, I didn't see it coming though at all. And
Yeah.
I don't think a lot of people did, but it just shows you though if you're sitting there with one of our quality factors is really important, and I'm not going to really get into it now, but it really helps kind of allow you to approach investing with a half glass full mentality. Just give these companies, give them a chance, and a lot of them are just going to perform over time once something happens. Either it's a takeover catalyst or it's an inflection point of growth or something. But basically, I think our process identifies staying power companies, even when they're not doing well. They're still not going to disappear. That's our hope here.
For your own personal investing portfolio, I mean, how do you discern of the 110 that are now in, right? Is 110 in there right now?
100 is actually
Or
yeah,
120?
yeah. There's 100. There's about 80 something in the 25 index now,
Okay.
but 120 total. I still track the ones I left that
Right.
yeah.
So how do you then discern, for your own portfolio? Because people might be watching this or subscribe and think like, okay, cool. Like index, it might be very difficult for them to buy a basket of all 80 stocks. Like, what have you been guiding some of your subscribers of like what you've been doing when you're now taking a look at the data and then what your take action steps are?
Yeah. So one thing to keep in mind here too is that it's a good question because it kind of goes into what the index really is. You think of the index as my pipeline of stocks. So just think of GeoInvesting as more of a, hey, if I'm looking at 10 stocks, I might bring one or two to Geo that I think are like fully baked in my research already. But what I've learned over time is that a lot of times those pipeline stocks do really well. You just can't get to them. So if I at least spent the time to say, okay, these guys are pretty much qualify soon. I'm gonna do more research, but I'm gonna bring them in. I'm gonna put them in the index. So a lot of them might not be the highest conviction just yet, but might be worth kind of owning to some degree. So when I started this index, I was already pretty much fully invested, so I couldn't go and buy them all. But how I would approach this personally, because I think we're in a new secular bull market for small caps, especially nano cap value since I guess mid 22. I go in it with a mindset of like I want to own as many of these as I can personally to some degree, and then I create these little buckets of conviction, 1, 2, and 3. And it's, the one is my strongest. I'll put the strongest weights there, and then less weights across it. But that's not how the index right now is supposed to be a equally weighted kind of index, though. That's how it's approached. I approach it with, okay, well, I know that every day I'm doing research and getting conviction maybe on some stocks, so I'm adding it there. But with the subscribers to our Substack, we know it can become challenging as these stocks grow and grow. So we make videos. We have a spotlight index where we try and say, okay, here's a stock from all 120 that we challenge ourselves to say, okay, this is one we want to watch here, and I'll show you some returns on that soon. So we're very, and that's actually today. I sent out a chat today, or a message today. That, okay, I just did something new. I took the 120 stocks and I gave everybody here's 43 stocks I like the most right now. But here, here out of that bucket, here's 18 high conviction, and then the rest are like low conviction. And I said, let's do a little test. We'll take a $20,000 portfolio, fake portfolio, and in the high conviction ones, we'll put 70% of the money, and the lower conviction ones, we'll put 30% of the money. And we're gonna see how that works over time. It should be fun to see how that works. So I'm always trying to make it fun and do what I can to help our members kind of get through it because it can be crazy. If you're a person who only wants to own 4 or 5 stocks, you have to do your research. This isn't like an advice website. We're not saying buy, sell, but you're gonna get a really good idea of what I like just by interacting with us. And even on Geo, like I tell people, if you love research, the combination of Geo and MS together, $600. I think we have a special package if you get them both or something maybe. Um, Really, you're getting everything there. You're gonna get because our Geo has a lot of stuff going on, like open forum every month where we talk about the whole universe in the previous month. We go through almost the whole universe, and every earnings report. It's like a 2 hour event, and some of those stocks will cross over. So you get extra conviction there too with our morning emails, weekly emails too. So that's what I tell people there.
All right,
Hope,
so I'm
hope that
gonna.
helps you a little bit
Oh no,
understand.
I'm about to translate Maj because I've known you for so long. So for those that I think caught most of what he was saying, if I can translate Maj and correct me if I'm wrong when I say this, you know, MSM, I think you've always positioned it as like your daily, almost like your journal of like these are the ones I've been doing this for 30 years. I know more or less which ones might be working right now or things that are interesting, without doing the deep dive, and I want to just keep tracking it. So MSM kind of exists for that,
Yeah,
the mind of Maj on just a daily basis. And then Geo really acts as more of like, okay, this is where I do more of the deeper dive in and fully flesh out a thesis on, maybe a company that crosses over into the MSM or one that's not in there, but it's where, that's where all
yeah,
my deeper dive stuff is. Correct me if I'm wrong.
yeah. There's definitely a deeper dive kind of approach to it, and it's for those that need that. I'll say like if I'm adding, I'd say one out of every seven stocks I add to the Cliff Note Index comes to Geo at some point. That's how the kind of ratio. And we add about 1 to 3 stocks to the Cliff Note Index every month. Now, it's not to say there is some conviction to adding them, but what I've learned in my investing career is that once your process is good enough, like that's key, right? If you can spend too much time in a stock where you miss a lot of that return alpha. So
Yeah,
my goal really is to get a process where I'm comfortable with. Okay, I have a process that I can at least own a little bit of it to feel comfortable with it. In the very beginning, and then of course, as you do more research, you get higher convicted, and then um,
you go from
and,
there.
and then yeah, and then yeah. So, but Geo is going to be, you know, a lot more easier for people to figure out what's going on with what I'm thinking and stuff.
For sure. Listen, Maj is the king of marketing, one of the best.
I'm,
And
I'm
so
I'm
we're
horrible at it. I'm horrible at it.
this is this is our semi-annual marketing workshop on how to put together investing tool products for the
Let's
microcap
go.
guys.
Let's go to my website. You'll see how bad we are at marketing.
It's the best, dude. I love it.
Look at my email list. Oh, that's it.
Yeah. Hey, real quick. You mentioned that you rebalanced in April 2025. What was some of your criteria for culling the herd, so to speak?
Yeah, so basically when I did that, I would look at each stock. I looked at each one. Well, I had my analyst help me too. We did a whole like analysis on growth expectations for the next year or two, and then valuation to some degree, and then so I had a valuation kind of assessment already done, like the quant side, right? And other things we do to kind of help with momentum like indicators in earnings and sales growth. And then I had that on one side, and then then I did all the qualitative research to see, okay, even if a stock might be overvalued, do I think, or fairly valued, do I think the qualitative makes it still a good 5 year potentially interesting stock? So I would keep it. If I didn't think that, I would remove it. That was one criteria. And that's where SVT hurt me. It was like I just didn't do enough. I just didn't know it enough too. But then there were stocks like, okay, we added these stocks like, all right, well, this is just a shitty company. Why did I even add it to the index? And we took it up, you know, and then one of those went up crazy, by the way. I removed it. So, but yeah, so it was basically, does the stock still meet the level of quality that we think it should meet? And if it doesn't, can it get there again? If it was a no, it's gone. If it's overvalued or fairly valued, do I think it can, okay, become undervalued relatively soon, okay, then I'll keep it. Then I'll keep it. So that's how I went through that process. So it kind of challenges me to do it. And I like it because it makes me go. It just gives me a chance to go over the whole portfolio and
Gotcha.
really, and you find even like when I prepare for these things and when I'm talking about it in a video, I find new things during the video that I didn't find even preparing for it. And I'll take people through the SEC filings, press releases, what I'm doing, and show how I'm looking at things and stuff like that. I could make a video about that.
Gotcha. All right, so here the slide that you're showing right now is since inception, how it's done. It's done, just absolutely horribly as one would expect, and that's a joke. It's over 100%. So, but like, let's say in the last 6 months, like, what have you been seeing? What's some of the data been telling you? What's been happening? I don't know if that's on your next slide. Here, go to your next slide. What's going on
Yeah, well, I
there?
want to say too, by the way, what we talked about, Bobby, was I
Yeah,
think I was very transparent about this, was that even though we were talking about how how decent the index was doing, beating the especially the iShares MicroCap, right, is crushing it. We're the blue here. I told you at some point it's going to get crushed, right? And you see it right here.
yeah,
And what was interest? This was an interesting observation I made here, and I was waiting for this to happen. Like, what's going to happen when we have a big market pullback? And I always told you that I think the stock would fall, the index would fall pretty hard once it went because it's a multi-bagger index. So
yeah. That was
you have a lot of stocks that,
super fun time when that happened.
yeah, not fun at all. Yeah,
Literally right before Vegas. We're like, oh, sick tariffs, awesome. I was
yeah.
joking about this in the last pod, but so sick. We loved it.
And it was like, okay, well, if you have these stocks doing really well, they're gonna get hit really hard because they have these crazy charts, right? Just psychologically. And then since we have a lot of stocks in the index where aren't all fully baked in terms of conviction, like the turnarounds, they're going to get hit pretty hard probably in a turnaround. So that's what you saw there. You saw this big drop, but then we increased really rapidly. So what I found was interesting was this is a diversified portfolio, but it performs really good in the bull market, and but in a bad market, it doesn't offer you that much protection because you have all these. It's because it's just tough, right? In a down market, you probably want to be more concentrated with your highest conviction stuff you own. So that's something interesting I learned, and I visually saw it and felt it, through the index. But I wanted to actually equally see how would the index do on a recovery, and as you see, just ballooned. So we're at 100. Actually, I think we hit 120% recently already. But so what's good? What's good? And this is, by the way, this is the this chart, by the way, is a since inception chart. It's like the average return since inception. It's not like a month to month what the actual performance of each stock is. It's as if you would invest in this index on day one. These are the returns you would be. I'm gonna probably amend this and show like a more month to month thing in future representations so people can see that too. But you go to the next slide here. This shows hey, this is the acquired stocks that we had here. And so it shows that when you find quality, actually it wasn't the SVT, it was SCX, right? That was the one. I said SVT was the one I got.
Yeah,
It
it's
was I think.
SCX.
No, wait, there it is. Fuck, it is. I don't have my glasses. I remember I thought I broke them, so I can't see anything.
Yeah, that SCX that was back in 22. Oh
Yeah,
wait, no,
yeah,
no,
yeah.
that was the date added. Sorry. Yeah, yeah.
So there you go. So that's pretty cool. SGRP didn't go through. Um, that was supposed to be acquired at 250, but didn't occur. So, by the way, I think that's an interesting stock now for all those listening. You can dig into that.
Shareholder.
Yeah, I'm not a shareholder at SGRP yet, or am I? I don't think I am. I'm thinking about it though. That's trading near cash. This is one of those things where trade. It's a brand merchandising company, customer experience management. Takeover didn't go through, but it's selling near cash-ish, like right around under $1. I mean, before they actually got acquired, they had sold some assets. We're making their story a lot easier for investors to understand. I think they bought back some stock, so some good things were happening. But now, so now I'm curious to see if this is an interesting one. The last release was pretty, even though it wasn't a great report visually because they didn't have some revenue they had last year. It looked bad, but the apples to apples comparison was pretty good. They're profitable. It's really good comments in the release. So, all right, let's move on here. So here's a 25. So we launched in April, so you can see we're the blue, and now we're at a 22% return. So we're still beating the markets already out of the gates with the rebalanced.
Nice.
So that's not bad. Let me go here. You show this the 25 index. You can see some of the stocks that performing here. I like this one here because it's a sleepy little OTC. The cool thing about a diversified portfolio like this, it allows you to go get some really illiquid stuff and put it just to have it in there. That's one. I like, in terms of, you can see here that what's happening is there's data centers, data centers, data center, uh, boom, boom. So a lot of these have these, and some of them didn't have the data center trend when we added them. It just
Well,
happened.
can I quote your you gave a great quote in your idea brunch interview that you did with over there with oh my gosh, with
Edwin.
Edwin, and shout out to Edwin. And it I what was your quote? Oh, here it is. Old boring companies suddenly becoming critical to sexy industries like data centers and electrification. End quote. That is your quote.
Yeah.
Great line. Great line. I mean, because and it's so appropriate because I mean, look, I think most people who follow microcaps forever and or either follow you or been on the club, microcap club, anything like these are all stocks that have been talked about for what 10 plus years, and
Yeah. Yeah.
you know,
And I think, Bobby, too, it's like, you have to be like, everybody has their own way of investing, right?
of course.
You have to be comfortable with it. So I'm very comfortable with owning some great stocks and being lucky. I really am. I mean, it's just, and I could have never, like TSI, I fell into that. When I bought it for the right reasons. Originally, like in 2017, 18, it was a data center play, but AI is what really took it to another level with a new CEO coming in. I couldn't have predicted that. And it just worked out that, it was, I invested in this company, a whole different management team. And but it's a small bet that turned into a big bet, and that's what's cool about diversification is that I can do that. On the other hand, TGen was a very strategic bet that we made. We came in there and we bought it for a reason. We came into it as they were entering the data center theme, and I love the CEO, and that was a bet we made because of that. So it's a combination of things, but that's what I like about, and you look at all these, dude. Look at them. Okay, let's look at TGen, TSS, PSIX. Those are both all data center stocks. TSI was always a data center play to some degree, but it wasn't AI. It wasn't really. They weren't really doing fantastic on the old management. TGen and PSIX just stepped into it. Now PSIX decided, okay, a couple of years ago when the stock was, I think, $2. I hit 100 a couple of days ago. Um, we didn't put it in the index till I think 27. I bought it around 12. I'm out of it, by the way. I sold it $100 share. I had to put the cancel
Nice.
order in. I top ticked it. It was great. But until it goes to 200. But but the PSIX, they just make boring engines. And then they decided we'll just make a special thing to protect generators and data centers.
Let
And
me ask you this: when you
exposure.
were because part of your process is you're pretty maniacal about talking to management teams. You really make it a point, and you do skull sessions, all that kind of stuff, not just for the service, but also just individually. You love talking to management teams. When you were just staying on this theme of data centers, and I think this might apply to maybe some other themes that maybe folks are, if they're thinking more forward, whatever. Um, was there at any point in the conversations with management teams, even what you've known these stocks for what 2, 3 years now, or maybe even more, where they said like, look, AI is coming, and we want to make sure that we're, we feel that we could be a huge player in providing the data centers that they need for AI, or just conversations kind of like that. I mean, did that happen a few years ago so that when you kind of start to see the theme starting to play out a little bit more, that you were ready to attack?
Not at all, no. I gotta tell you this too. It's like I wasn't in I mean, I was in that AI hype camp. This is all hype,
Of course,
baloney,
yeah.
right? So I just didn't. If I saw somebody talking about it, I would avoid it until I experienced it to some degree, like by mistake. But no, but I will tell you this too, Bobby. Like the cool thing, like the one thing this whole thing has taught you too is like you don't have to talk to management teams. Once you have a quality bucket of process and you trust what you're reading, that's key. Can you trust what you're reading? And you don't necessarily have to call them all the time. But of these companies here, like you see here, let me see. I enter one, two, three, um, four. So I only interviewed 5 of these companies out of this list here.
Mm.
I mean, I knew who they were, from prior years. I've been doing this for so long, but so I was cool. I knew where the risk lied, right, and what to look at. Like, why is this company now better than it was 20 years ago?
Hmm.
And then the network we're building too here at Geo and MS is ridiculous. The people, and they've helped me a lot comb through some of these stocks to understand. Like KQ was looking at about but then I had one of my members like, you got to put this in your index, or I'm going to basically shoot you. I think that's the exact words. So we put it in. Well, I
So
was just telling you. So like,
fully invested position. You better put it in your index.
so I do own it, by the way. I want to live for a few more years.
Yeah.
And you look at all these stocks. I think I just for disclosure purposes, Bobby. I saw PSIX. I might own a tiny bit of ULBI. Don't quote me on it, but I think I own a little bit. I don't own ACCMF, I don't think yet, and I don't think I own ADFJF anymore. It's a DRT. So there you go. So I own most of these except for ACCMF,
So
ADFJF.
so looking at this slide, these were added to the index on April 30th,
Okay, so
or
that's really important you asked that. Okay, so
okay.
they were actually, and you're going to see this on the next slide. I put these start prices here are from the a price of let me see. This is probably the 2025 edition when we made that change. This is not from the original 2022. I have a different slide for that, which I'm going to show you next year. But what I wanted to really say here to you was like, because you're talking this all boring company. This one, TGen, TSI, PSIX, PPH 4, and now maybe even 5 soon with OCCF, were all these companies that just got boring companies that are getting transformed from a new industry trend that's affecting them. They're finding a way to get involved in it. And like some of these, like PPIH is just percolating now. They need like especially piping, for liquid, and they found okay, liquid cooling, piping, data centers, and that's just and the market really hasn't figured that out yet. We try getting in really early in those trends, as you know. So we go to here's a 2022 index. So a lot of those stocks came from here, and here's like you saw if you TSI is up 242% in the 2025 index because we added it. That's where we were balanced. But in reality, it's up 4,894% since we added it to the index originally. So 2022 index, which we also track for our members and subscribers, gives you a reference of what stocks, if it was added before a 25 rebalance, what they did too. So you have it's good because you don't want someone coming in and saying, oh, this is only up 10% in the 25 index. Well, you go back and look at the 22 index, might be up a lot more. So they have to know to, navigate that. But you can see here again, I mean, some pretty big returns here. For some, and what's amazing is some of the returns that outperform 22 are the same ones that are outperforming 25 also. So they have some momentum going on there, which I like to see that because I want to see if we can have. It's very hard to get stocks to perform year after year. Usually 1 year and done sometimes. But so it's kind of cool to see that. Go to here. This shows again we're actually at 51 multi-baggers now, but um, on the here on the left, the right hand side, you see at the highs what they were, right? So 51 multi-baggers. Now we're still at 26. It usually sits around 25, 26, no matter what the number is. We've had 39 stocks over 50%, 58 over 20%. You can see 78% over zero, and this is the current, So basically, yeah. So that's that. And you go over here. This is where it gets challenging. Then this shows you what happens. Okay, again, stock picking, right? So this is where we start getting into, okay, these I showed you before were more like passive indexes, right? So we do try and pick spotlights out of that index. And I think there's maybe 7 or 8 in there right now. And you can see, okay, well, at the high, they did really, really good. 68% crushing the market, crushing. But no, now they've come down a lot. And that's Now this is more of a concentrated portfolio, and I still think they'll do. The goal of this portfolio is, can we find stocks that can get about 50% short-term return and long-term multi-bagger returns? That's what we do there. And but we do. We're still, at least we're still eking out on the Nasdaq. We're still crushing the, the Russell and the microcap. So there you go.
There we go. So when you're thinking about the index and you look at, when you're adding new names or you're thinking about just the overall balance of it, how do you think about it? Because clearly, obviously, the main theme of the last, let's say, 3 months has been data center infrastructure. That's been kind of the main. Those are the ones performing the best. That's what's going to get the most highlights and headlines, and that you probably want to tweet about the most, to get people to subscribe and look at what you're doing.
Right.
But how are you thinking about not just that theme moving forward? I mean, I think everybody would agree AI is not going anywhere, but is it now starting to get a little frothy? How are you starting to conceive of the, excitement versus reality of where these companies are currently at in their life cycles?
Yeah, to be clear too, right? To be clear, I don't think the data center theme is anywhere near over. So, what I gotta be careful with though for the index is, if I'm overweighting that right now, 3, 4 years from now, you gotta be careful, because now you're in this thing. So, I think about it that way. I do like to diversify across a lot of different themes, but I do want to be over diversified in themes that are working. So I am looking at that. But when I'm doing, the key here is that I'm not trying to find these pump and dumps or the dreamer company. I'm just trying to find old school companies that are transforming themselves because of the trends. So they have a higher chance of survivability even after the trend's over years from now.
And transforming themselves, it sounds like, also in a much more real way. Like we've had the companies in the past, that are just trying to survive or raise capital, where, they were a mining company, now they're cannabis. It's like, no, we're not talking about that kind of transformation. We're talking about companies that have actually real, assets. Maybe that was specifically for something else, but now there's a theme that,
Yeah.
will work.
And I'm looking for like this, to some degree, I'm looking for, I hate to use the word margin of safety, but some type of, do I have a way to save myself from the stock, cratering on me? And like, when you look at Tecogen, TGEN, which I do own, by the way, half the revenue is recurring revenue in nature. So I know, okay, this, when the stock was $2, $3, it's probably worth $1.25 on a bad day if all the other revenue went away. So I had that with FTEK, another one I own, which wasn't on that list yet, but which is a great example of what we're talking about.
Example.
Fuel Tech, FTI, and stock was like buck a share in cash, $1.25 in tangible book value, in a horrible industry. They basically have mission control systems for coal-fired burners, and as you can imagine, coal as a source of energy has been declining over time, so it's a declining business. But then they realize, okay, well, um, be, because there's a lot of emission issues with the turbine, special diesel turbine engines, right? Natural gas, um, and that stuff. Natural gas. I think it's more on the diesel powered engines. Um, they figure, okay, well, you know what? We have a market here. So now they just fell onto that. And the stock now is what, 275. You go in the earnings call transcripts, you can read all about the transformation of the company. But that was a situation where, okay, if I bring this into the index at the right price, I kind of know what the downside is to about $1 or maybe $1.50 or something. So I'm looking for more of those right now. So when I'm going into these, I'm being more cognizant of that as if I go into these trends. But now there's satellite. We're looking at those trends now, right? But I'm also looking for boring stuff too that isn't trendy, but it's just transforming. Don't get me wrong on that too. So yeah, and you ask me, what do I do, right? So I'm a big advocate of reading, as you know, Bobby, press releases, right, and SEC filings and stuff. So I'm going to show you this real quick, really, really quick. So I'm just reading these releases. I'm basically, so I like to, for example, follow. I have a thing, if I want to follow stocks with this thing brings in only stocks releases from all the major release houses. for stocks of 2 billion market cap or less. I only want to focus on the small stuff. I don't care about large stuff. And then we have filtering capabilities with it. So you can go look at by earnings, a lot of different categories, by price. So I go here, put some filters in there that I want to look at, and I read them every day. And my staff read them every day. And that's how I learn about trends and turnaround. So I'm going to give you a great example. I just did this video here for I'm by the way, I'm teaching a multibagger class. I know I told you this. I have a class.
What? Where?
I haven't marketed it all yet, but I got like 5 students, and we do.
Where in Puerto Rico? What is
It's actually it's virtual. It's virtual.
Oh, virtual class. Oh, okay. With like a university or something, or you're like a master class? Kind of with
I'm flunking.
Miss University or what?
Yeah, I hope so. Okay, now you're in marketing. See?
Yeah. I like you. I figured you like that one.
Let's go to UG. I'm going to show you a typical information arbitrage. So UG is a United Guardian, and I am really obsessed about reading these releases and have my staff do it. So when you read, would you open that release? United Guardian pays cash dividend. Probably not. And most of these dividend releases end right there. Yeah, okay, we paid a dividend, that's it. Well, if you look at this golden nugget here, they're talking about growth initiatives, for the first time, that are available to them. So this is what you're seeing here is the discovery of an info arb discovery now, a product journey. So I've already called the company. I'm gonna probably talk to her, hopefully today at 4 o'clock or something after we talk. So you don't see that in most of them, right? I mean, if you go like to other companies that have dividends, you're not going to see that. And what the key here was when she says here, we're looking at a major new product that has the potential to significantly grow the sales of their lead product, our most important fire improver product. So that's pretty key. And most dividend releases aren't like that. And that's what I'm reading all day long. So this isn't going to be a data center play. It's not going to be a sexy play. It's just about, okay, they're just finding a new market for one of their drugs potentially here, or ingredients that they use in drugs or sell. It's a lubricant, by the way, medical lubricant. So that's basically what that's all about. And so I'm reading these things. And this tool here helps me get through. I used to take me about 3.5 hours after 4 o'clock. I would do a post session, review of earnings releases coming out every day when I didn't have this, and then a morning session. And it would total about 7 hours. At one point, I outsourced it to some outsourcing that would cost you like $4,000 or $5,000 a quarter to do it. And I would wake up every morning, and then they would have this nice little spreadsheet for me. I could go through in 20 minutes. It was great, but I still wanted a more, a process like this that I could use. So I'm just reading, man. It's not like any kind of, secret sauce. Just taking the time to read the boring stuff. And what I've learned here from, conversations with a lot of people is that even like, great investors is, I don't know if press releases is a part of their primary research. A lot of it's screens, reading maybe the SEC filings. But I think the issue I think some investors have with press releases, and because there's a lot of bullshit in it. And we all think
so much bullshit.
Just BSing us. And how do you get that BS? And you get to that BS through some of the filters you would use here and other ways. But I just know from doing it for so long that I recognize who this doing 30 years.
Can I ask you something about InfoArb? Because look, you'll appreciate this. So we're recording this today. It's Wednesday, July 23rd, 2025. I'm putting out a big post this weekend celebrating 10 years of Planet MicroCap podcast, by the way. And I was going through some of our old stuff. And the first interview we ever talked about was InfoArb. That was back in like 2015.
Remember that?
Yeah, that was sick. It was, what's crazy about it, like, because I'll be posting a link to it for people to hear the first one, is it's all very relevant still today, in every way, shape, and form. But I'm curious, how do you feel that it's changed over the years? Not necessarily like the concept of InfoArb, but maybe the content itself. Obviously, everyone's whether it's changes in, PR culture, or how IR is also now changing how they're communicating these messages. How would you say, in just not the concept of info arb has changed, but then once you're doing the process, how that's maybe changed over the years,
Yeah, and
if
I'm
at
glad you asked the
all?
question because I was actually having a conversation about this with somebody a few days ago, and you'd think that the market would be more efficient these days and flush that stuff out, right? And I think because I don't think it has become more efficient. I still think there's less investors in our pocket of the nano cap universe, but more places that information can hide. And that combination of less competition and more hiding places is really an advantage. So I just think it's gotten better, man. It's got I have not seen it getting any better. Like in terms of inefficiency, I haven't seen any indication that InfoArb is being flushed out more quickly in nanocap land than it was 5 years ago or 10 years ago. And it's amazing. You can show case after case study, right? And I still think it goes to that we don't believe anybody. We don't believe management. That's just the mentality people have in nanocap land. Don't want to believe them. And rightfully so. I mean, we've gotten screwed by a lot of teams. But that's why I think it still exists to some degree. I mean, if you look at FTK 2 quarters ago, or Q4 was one small mention of data center in an earnings call transcript, just one. Now you would have had to, okay, am I going to go listen to this conference call transcript where the company's losing money? That's where revenues have fallen in half for the last 5 years, targeting the coal industry. I don't know. I don't know what's going to get a lot of play. But if you go in there, you find it. And I actually think the press release, I should have showed you earlier, but the press release had one mention of data center in it. Just one small line. Enough to get you to go look at the conference call transcript. But so I just think that it's still there, man. It's that wouldn't a lot of these microcaps aren't going to screen well, too. They're losing money. So when you live in that kind of pocket, you look at these companies are losing money, look horrible, don't screen well. I think you're always going to have an edge there.
Yeah. No,
You know,
100%. But I mean, why even pay attention to press releases then? Why not just go? I mean, when we talked about it, I remember we specifically were talking about SEC filings, and that was really where the bulk and majority of the info arb that you were finding was, and I'm sure continue to this day. So why even bother with the press releases when you're like, all right, if I don't trust what they're saying, I know the PR is going to be full of fluff, like F it. I'm just going to go right to the SEC filings. If they might file an 8K because it's a material event, so if they're press releasing something but there's no 8K, like, is this really something I should be paying attention to versus the 8K? I'm like, all right, maybe this is a little bit more material than I thought, or just going digging deep into the Q's and K's and just call it a day.
well, that's exactly the point I'm trying to make here. That's perfect because that is the
Can't lie
mentality.
there. Can't lie there.
That's the mentality that takes people away from releases to the filings. So it's about 5% of that isn't bullshit in filing and press release. I don't know what the number is, right? That's why I like to do it because of that. Because the thinking of investors is that there's all this bullshit release. I'm not going to read them, so most of them are not focusing in that area. And to tell you the truth, the filings aren't going to be really the best place for InfoArb is the scripts, right? The filings don't have a lot of great stuff, and they have some, right? But the bulk of it really isn't going to be there because there isn't a conversation going on. And the conversations, management teams are going to say stuff in those scripts, right? And they can expand on everything. They can expand on things that are in the release, and they can expand on things that are in their filings. So that's where you find a lot of it. So yeah, I would just think that to me, it's like the progression to me is it's not just that there's information in the script. It's is there information in the script that's not anywhere else, and that's why the press release is so important because the press release is the most people are probably reading release before the script anyway. So that's probably the first level of people reading that, right? Then the script. So if there was nothing in the release, that was in the script, then I get really excited. You know, TSI 10x, 10x our capacity, things like that. Um, so that's really the most important part of the release is not necessarily reading it per se, is understanding what's in it and what's not in it compared to the other sources. And I think the files are going to have like good stuff. Sometimes you'll have good stuff in the industry. You'll have some good stuff like on the products that you understand things, but the nuances of some of the growth objectives, a lot of times aren't going to be in the filings. So yeah.
Gotcha.
But that was my evolution of me. When we first talked, that was just getting started. InfoWire were just like I didn't really start getting into it, and it's evolved from that to more of an active kind of everyday role.
Yeah. No, no. I mean, look, and guess what? It also helps that we have a Chat GPT and some of these services that. No, it does. But at the end of the day, it does help a lot, right? Like, I mean, I've used it all the time for combing through financials or hey, what did it say in the SEC filings? You could do keyword searches and stuff if they this, that, the other thing, or I find it
It's great. And ChatGPT
super
poses a
helpful.
problem though. Like ChatGPT is another level of efficiency if you use it right. It just brings you
Yeah.
closer.
Yep.
What I tell people is I was just like, wow, it's almost like too much because what I'm realizing is, oh my God, there's so much info out there. I can't go through it all. you know. So what's great about my team is having. I'm just lucky enough to have a team. Well, I just hired 3 more interns. I was telling you, I think, just to come through this stuff because it's almost like a negative. It's too much.
There's so much.
yeah.
It's a
So
lot.
yeah,
It's a lot.
and but it's kind of cool though too.
100%. All right, cool. Maj, we've covered so much today. I mean, kind of final question, final thoughts here. As we're, the calendar is flipped. We're now in the second half of 2025. Any thoughts moving forward? Any other trends other than data centers and stuff like that you've been kind of starting to noodle into a little bit more? I know you're agnostic, but is there anything else that's been catching your eye recently that you've been kind of diving deeper into?
But I like the satellite theme right now. I think I like that theme a lot. I think defense in general now because what's going on. Onshore and the onshoring theme, because of the global tensions. I'm loving companies right now that are providing supply chain solutions. I think that's really, really important. So those are kind of things I'm looking at right now. To play on too. But of
Very
course,
cool.
I'm always looking for a good, boring turnaround to just selling more products to its current customers,
Yeah.
or getting margin expansion. I'm always looking for that stuff too, outside things.
100%. I love that. All right, cool, man. Maj, this is great. Where can our audience go and find more information on Miss Microcaps and GeoInvesting?
MS, can't even say it. Yeah, MS Cliff Notes. Substack.com, right? That's where our index is. You can also get there by going MicroCap Investing Cliff Notes. We have that little tagline there too that you can find it there. GeoInvesting is just geoinvesting.com. And we have an opt-in list on both of those. You can find us on Twitter, and at GeoInvesting. You can find myself at Maj GeoInvesting, and then MS Microcaps on Twitter also. So there you go.
MS Microcaps.
Yeah.
Very good. Maj, thank you for
There
joining
is
me.
a name change coming though. I will tell
Oh,
you.
can we break it here? Because I cannot wait to give you
I wish
the
I could,
hardest.
but I
No,
can't.
you have to because I'm going to give you the absolute hardest time on whatever new name it's going to be. So you have to break it here.
We're going through it. Look, it's going to be something in the multibagger area there, probably because of what's going on. So,
I love
we'll see.
good
Or maybe
shit.
Mr. Microcaps. I don't know.
Miss,
Mr. Cliff
well, if
Notes.
you're gonna have a miss, you need, you gotta cover all base. Well, Maj, thank you so much for joining me today, dude. Really do appreciate it. Good luck, stay safe, and I'll see you in Toronto.
No, I hope so.
Very cool.
All right,
Later.
man. Thanks, bud. Bye.